Hi everyone, today's video is a little different. I'm recording this from a hotel room here in Riyadh. Originally I was in Doha for business, and on the 4th I was supposed to travel to Dubai to attend a major blockchain conference focused on tokenization and the future of digital assets. But then everything changed because over the last days tension in the Middle East escalated dramatically. Airspace disruption began, flights started getting cancelled, and Hamad International Airport in Doha is temporarily closed. So we can't go anywhere. So instead of flying to Dubai like I planned, I had to evacuate Doha. I left Qatar by road, crossing the borders into Saudi Arabia, and now I'm here in Riyadh. But even in the middle of all this chaos, something very strange is happening in the financial market. Because while the world is reacting to war, Bitcoin is doing opposite of what everyone expected. Right now, global markets are experiencing one of the sharpest panic reaction in years. Asian markets have been selling off. South Korea even triggered market circuit breakers after a dramatic drop. Oil prices surged as tension around the Strait of Hormuz disrupted shipping routes. Gold initially spiked as investors rushed into traditional safe haven assets. The US dollar strengthened and global equity markets from the Nasdaq to the S&P 500 started falling. In other words, classic risk of panic. But then something strange happened. Bitcoin barely moved. In fact, after briefly dipping towards the $63,000 range, Bitcoin reversed. And it didn't just bounce, it started climbing. 64,000, 65,000, 66,000, 67,000, 68,000, even more. And then it pushed over higher and higher. While global markets were struggling with geopolitical shock, Bitcoin continued rising towards the $73,000, $74,000 zone. Now, this is fascinating because for months the narrative has been that Bitcoin trades like a risk asset. When stocks fall, Bitcoin falls. When liquidity strengthens, Bitcoin drops. But right now, in the middle of geopolitical chaos, Bitcoin is acting differently. And that raises a very important question. Is Bitcoin beginning to behave like a true global macro asset? Because there are several forces colliding at the same time. First, geopolitical tension. War always creates uncertainty in global markets. Energy price surge, supply chain get disrupted, governments increase spending. Historically, war also triggered massive government borrowing and money printing. And when liquidity increases in the financial system, hard assets tend to benefit. Second, political developments in the United States. Recently, President Donald Trump publicly supported the passage of the crypto market structured bill known as Clarity Bill. At the same time, he openly criticized large banks for opposing stablecoin legislation. That signals something very important. The battle between traditional finance and crypto infrastructure is entering a new phase, and markets are reacting to that. Third, institutional adoption continue accelerating. One of the biggest headlines this week came from Kraken. Kraken Financial has now received access to the Federal Reserve's payment system through a master account. This means a crypto native institution can interact directly with the US financial infrastructure. Just a few days ago, this would have been unthinkable, but today it's becoming a reality. And then there is another major structural shift happening quietly. While traditional markets close on the weekends, crypto never sleeps. When the geopolitical escalation starts over the weekend, global financial markets were closed. Stock markets were closed. Future markets were closed, crypto markets were open, and traders around the world immediately moved into decentralized platforms to react to the news. Platforms like Hyperliquid and DeFi trading venues suddenly become the only global market where people could position themselves in real time. And that might turn out to be one of the most important signals of all. Because once traders experience a market that never closes, it becomes very hard to go back to the system that does. This is exactly how financial infrastructure evolves. In 2008, during the financial crisis, ETFs exploded in particular because they allowed continuous trading while traditional funds struggled to process transactions. Today, decentralized finance may be going through a similar moment, a crisis that forces people to try a new system. And once they do, they never fully go back. Now, if Bitcoin continues holding strength while global markets remains unstable, something even bigger could happen. Short sellers could start getting squeezed. As Bitcoin pushes higher, leveraged shorts get liquidated. That forces more buying pressure, which pushes the price even higher. And then something very powerful kick in. FOMO. investors who were waiting for sidelines suddenly rush back into the market because they see one asset moving up while everything else is struggling. At the same time, ETFs inflow into Bitcoin are continuing. Will Bitcoin survive the global shock? The real question may now be, is Bitcoin becoming the asset people turn to when global shock happens? Because if that narrative begins to take hold, then we may be witnessing the beginning of a new phase in the Bitcoin story. Phase where Bitcoin stopped being viewed purely as speculative assets and start being treated as a global store of value. Now, I want it to be clear. No one knows exactly how this will play out. Geopolitical tension remains extremely unpredictable. Oil prices could spike further, market could remain volatile, but one thing is becoming very clear. In the middle of war, uncertainty, and financial instability, Bitcoin is not collapsing, it's rising. And if this momentum continues for just a few more days, this really could turn into something much bigger. I'll keep you updated. Thanks for watching, and I'll see you in the next one.